Hello, everybody, and welcome to the Middle Class Investor. This is Seth Martin, your host. It is Sunday, and I'm looking. We're going to start today with a chart of the 10-year Treasury. We had been talking about this spot down here. Oh, it's kind of sensitive here. This spot right here, and we were kind of waiting for the market to make its way down here, and we saw the week before last, it just touched here. Now, I'm going to remind everybody, this is just an arbitrary space, okay? It's not, there's nothing magical about it. But it is interesting how it came down and touched, and then last week it rallied a little bit, and I said, don't be surprised if it comes down a little further into this zone here. And so now we're into the zone solidly below this low here. You can see the old low is right there, and we've crossed through that old low and into the support area. So, I mean, it could be that the 10-year Treasury, rolls over and makes another low and starts to just kind of bottom out down here. Or it could just be that it takes off and starts going here. So we'll see, but it might have one more week, just chopping around in here. Maybe we get something like kind of an inside week where we're inside the previous week's range, and then maybe next week it takes off. I mean, I don't really, there's no way to know, but the only reason I say that is because if this really takes off, it'll probably coincide with the market falling, and it looks like to me a little bit like the market has a little bit more to go, and so that's the only reason I'm saying that maybe it rolls over and makes another low, but not much lower. I mean, it's near the bottom. This is good support area off this previous. Looks like a fourth wave. Looks like this is a 1, 2, 3, 4, 5, and looks like we've pulled back to a fourth wave low, a little bit more than 50%. I'm sorry, that's not right. These Fibonacci's I have on the chart are not right. So let me take these off and put on a new one here. So from high to low, from low to high, whoops. I can click on that. Why am I not able to click on that? It's zooming in for some reason. All right, well, I've got some sort of, something's wrong with my cursor. I'm not sure what. Let me try this again. No, it's wanting to zoom in. Okay, so I'm not going to be able to do that. So not sure why it's doing that, but anyway, if I go from low to high here, probably would see that this is about a 62% Fibonacci, and so it's probably right in the sweet spot of the pullback. So it's kind of an expected area, but it's I don't know, I just think it's an area we really need to watch it. I guess that's really all I want to say about that. All right, let's go look at the S&P 500. You can see the reason I'm thinking we might go a little higher is, one, I've got my space out here, so I've got my target. And two, I don't know, it looks like maybe this, a lot of times when you reach, now it didn't do it on these other two highs here, but a lot of times when you reach these highs like this, you'll get kind of a pattern that looks a little bit like this, where it kind of goes outside, but then turns around and sells off. So I'm thinking maybe next week we might get some higher highs. We might get a final little rush into the highs here, and then turn around and sell off. But it could also just go down from here. So either way, we're at the top of this range, and the next move that I'm expecting is a wave E all the way down here to these lows that coincide with this channel. We should look at that. So if you look at this, let me zoom out. You can see here these kind of intersect right around in here. So right around November, and you know, right in this area, right before the end of the year. So what is that? That's about 22, 25 or something like that. It's down there quite a ways. A new low below this low down here somewhere around 2250. So that's pretty substantial. I mean, you could see. Let's see what kind of sell-off we could be seeing here. Boy, I tell you what, my cursor, I've got some sort of, I clicked on some sort of setting that's making this zoom in, so I can't use any of my tools down here. I apologize for that. Don't know why that's happening, but it's happening, so I'm not going to mess with it. But anyway, it's probably 25%, you know, from here to here. So I'm guessing, you know, that's more than we all want to lose in our 401k, so might be looking to take a little risk off the table. All right, let's look at 13-week Treasury. We already looked at the 10-year, and you can see here the 13-week Treasury looks like it's at least going to rally a little bit, but we're below this range, and I expect the Fed probably later this month will try to lower rates, and then about the time they lower rates, this will take off to the upside probably. They're just going to be chasing their tail. They're not going to know what to do in the rate market. I think it's going to be interesting to see whether or not the Fed's credibility survives the upcoming, 3 to 4 years. I think it's going to be very, very, very challenging for the Fed. And hopefully, at least my hope is, I'm not sure what everybody's hope is out there, but I'll go ahead and lay the cards on the table. My hope is that the Fed gets just eliminated, that we get away from even having a Federal Reserve. I think they're more or less useless, and they're mostly there to destroy our money. So I don't see the point of having them there. All right, let's look at these other countries. Germany's looking a little soft here at the old highs, so it could be rolling over, or it could just be taking a respite in its way to go a little higher. Same thing with Japan, although Japan looks a little stronger with the gap there. Sometimes you get those gaps in a third wave, so like a third of a third. So this could be 1, 2, and then 1, 2, and then 3 of 3 here. United Kingdom also having a little trouble at the old highs. So, these markets, I just follow once a week here. I don't trade them or anything like that. So I'm just telling you what I see right off the top of my head. All right. Let's look at the VIX real quick. That's always a good one to look at. Volatility came in quite a bit last week. It gapped down, ran down, and it's kind of a doji. So if we get a couple of these dojis, we might see volatility ready to turn here and swing to the higher side of this range. Would not be surprised at all, especially if that wave E kicks in earnest. All right, let's go over to Thinkorswim charts and look at a couple of instruments. I reloaded Thinkorswim today. I put the new software on, so I don't have my normal chart set up here, so just kind of ignore the bottom. In fact, let me just go to studies and just get rid of the bottom altogether. It's not useful. I don't use that. How come that didn't work? Interesting. Well, I guess this is going to force me to load a style. So let's just look at base chart. Yeah, we can just look at this. Or I'll tell you what, let me load a different style. Sorry about all this. Let's look at this one, 520.50. Oh, that's not the one I want either. Problem is you create all these styles and then you can't remember what you call any of them. There we go. That's the one I usually use. So this is the ES. So this is the futures right now. We're down, showing down 250. Let me go to a weekly. Where's my? See what I mean? It took away some of my stuff. So, oh well, that's fine. That's the weekly chart. Let's look at gold. Guess I'm going to type it in. I don't know what happened to some of these settings of mine that that allowed some of this stuff to just be clicked on, and now all of a sudden it doesn't work. It's just very frustrating. So we got gold, you know, right when you were hearing all the hype, right in this area. Look how much it sold off. That's so typical. You know, people were. It was funny. I was on a group text the other day, and somebody said, "Hey, what kind of stock picks?" And of course, I never do that. I never give anybody ideas over text or anything. But one of the other guys did, and he said GDX, which is the gold miners index, and of course he said that, and it was like up here. So this happened later in the week, and of course we're pulling back in some sort of wave 4. I had this drawn out here, but it's playing out more right in here. So wave 4 could pull back, you know, pretty deep, maybe into this area here, a little bit further than this low. And then we could have a run up even a little higher. So gold could get up there toward 1450, probably the underside of this trend line. That's probably why I have the trend line there. Yeah, kind of placed it under these lows. And then that would complete this whole thing here. A, B, C would likely complete B. And I don't have... well, let's see if I can customize this somewhat. Add to time frame. And custom. No, I don't want custom. I want daily. Time interval. 20 years. Weekly. Okay. So I want to add that. Alrighty. Now I can add this longer time frame. So just to remind everybody, I tell you what, I wonder if I can, let's see if I can, click on all data, max available, see what that does. Really didn't give me any more. So anyway, what we're looking at here, just to remind everybody, we're looking at this bull market starting in 1999, run up into the top of wave 1, and then we're looking for a wave 2 and an ABC to correct all the way down here to this 4th wave low, which is around the mid 600s, and that should be the lowest you'll ever see gold. Well, at least in terms of dollars. It could be that some other currency is created in the future in which gold will be traded, but dollars we're not likely to see, well, not in our lifetimes anyway, gold at that level. All right. Silver, you know, there's a ratio that's kind of traditional between gold and silver. It's usually like 50 to 1. So if you divide gold by silver, par would be 50 to 1. You know, gold usually trades 50 times. The price is 50 times greater than that of silver. But anytime it's greater than 50, usually silver's got further to run to the upside. And anytime it's less than 50, gold is going to likely outpace silver. So right now it's like, I don't know, 80 to 1 or something. So that tells me that silver is likely to outpace gold over some long period of time, and maybe over this to finish out this C. Again, this is the run up in the bull market. Maybe a 1, 2, 3, 4, 5. Fives are usually very long in commodities. So silver could pull all the way back here to the $8 range, high sevens, but it's got to complete this B wave first. And you can see, let's zoom in on here and look at this a little bit closer. You can see here that you know, this is looking a lot like you know, some sort of wave 2. Maybe it pulls back into here and then hook'ems out. In fact, if you look at it, if we zoom back out and look at it, it's almost easier to see when you're zoomed way out. See this kind of A, B, C, and you can see C here looks like a 1, 2, and we're just starting in 3. So silver could actually get going pretty darn fast here, and just, you know, it's at a great reward to risk area right here. It might pull back a little further, maybe get a new low here, down just below this low, and then, you know, it would be a great buying area, because you could get silver to run up, you know, all the way to here to the lower to mid 20s before we roll over in some sort of wave C. All right, let's look at the euro US dollar. That one I lost a little money on last week trying to, you know, play the end of this move here, and kind of got in right around here, ran up a little bit, and then sold off, lost some money. Try to get in somewhere else in here. I can't. Well, actually, I'm on a weekly chart. Maybe that's not where I got in. I got in probably. You probably have to look at a 4-hour chart to really see where I got in. I think I got in right here, thinking this was trying to bottom, because you got kind of a 1, 2, 3, 4, 5. But then it didn't even get to the wave 4 and rolled over, and so I lost some money here. Anyway, I'm waiting for this to find some support. It's likely not going to find support until it gets down to this area right here, just below these lows. So that's likely where this is going to find support. So we'll probably get a little bit of a rally and then another sell-off into this area around 1.116. So if that happens, this might be a good area to try to enter. If not, this is going to roll all the way back down to a new low, and you should be prepared for either scenario. All right. Trying to think of I think the US dollar JPY had some good looks in it. Let me just look at that real quick. Yeah, it looks like the same kind of deal, but a little bit more defined. This looks like maybe a 1, and then we got this ABC going on here, and maybe we're taking out into a 3. You got there's a lot of demand right in this area. So if you to me it looks like any price around this, you know, if you can get this price around 107 area, that's a great buying opportunity for the US dollar JPY. GBP US dollar GBP is a Great British Pound. Oh yeah, I made a new low there. Okay, I didn't know that. So it may be a lot like the euro US dollar, where it could take out this old low. Just have to see. But it has made a new low here, and so what you want to do is wait for it to rally some over some time frame and then pull back to a higher low. Let's look at oil. Oil's been there's been a lot going on in oil, a lot of talk going on in oil. If you look at oil, this looks like some sort of pullback after this run up here. And if you look at this carefully, what you see kind of like a 1, 2, 3, and this could be a 4. We're going to see a 5, or this could be A, B, C, and we're looking for some sort of retrace down below here. Now, my feeling is probably the first just because if you look at oil on a larger, let's look at oil on a weekly. Let me do the max. Remember, we've got oil, you know, trying to eke out some sort of triangle here. So actually, looking at it like this looks like A, B, C, A, B, and then C would be down to here. So maybe maybe we're looking for oil to go a little lower here. Let's go back to that 4-hour chart and just look at that again. So A, B, and maybe C is a 5-wave move. So 1, 2, 3, 4, 5, and then we got A, B, C. So oil could be poised for a decent sell-off here, maybe down into this area around 51 over the next several weeks, or a couple of weeks. We'll just have to wait and see. It's a pretty decent move, but then, you know, over the next, I don't know, several months, 6 months maybe, you might see oil get down into these lower numbers around the mid 30s. All right, what else do we have here? That's about it. I wanted to look at, let me pull up the workspaces, change my workspaces. So I wanted to look at the Euro US dollar because it's showing here. I don't want to spend too much time explaining this software, but basically this 0 is the start of a sequence. It's showing maybe potentially a 1, A, B, C. Now, it had a little wiggle here, and then it continued down. So again, this is where I was looking to buy, and of course I lost money last week in the Euro US dollar, and it rolled over. But notice if it breaks this low back here at 1.18, well, then it's likely going to start a new sequence. So just keep an eye out for that if you're trading the euro or any currencies, because those, once it breaks that, it can actually move pretty rapidly into kind of like a flush type deal. All right, everybody, that's it for this week. I hope you enjoyed everything this week, and we'll look forward to talking to you next week.